Hello, everybody. Welcome back to my Daily Dose with Tim. Today is season 3, episode 19. My oh mine. And today we're officially part 3 of the topic why distress properties. And yesterday, or the previous episode, I mean, it was yesterday, I actually took the opportunity to answer a lot of questions that have been coming in and piling up. Funny enough, none of that were really about distressed properties. However, that's also why I figured I'd take an episode to actually do some relief there. So with that said, part 3 of distressed properties, and today is about why are we doing distressed properties? And over the first couple of episodes on this specific topic, I've already discussed with you some of those reasons. However, today I really want to just really clean that up and sum it up because, again, it's all about the thought process and clarity in your mind about how each strategy functions and how it contributes to your financial goal. And so, with that said, as per usual, I'm going to leverage some of the slides that I have been using just so that it's extra clear for everybody. And these are actually some of the training slides that we've used in our webinars and seminars. So in case you didn't know that we actually run a lot of free webinars and seminars from Trust Your Talent Academy, I'm going to once again post the link to our Eventbrite page in the comments section. So that way you're able to follow that page and you'll get updates whenever a new topic comes on. And starting June this month, it's June 1st already. It's going to be really, really exciting because on most Saturdays, we're going to start to run new webinars as well. And some of these are going to be with myself, and some of these are actually with industry experts and their investors, their power team members, so that we can actually share with you real-time, up-to-date news, regulation changes, and their business practices and their success stories, and maybe a lot of the lessons that they've learned over the years, so that you are able to really put the theories and the real market opportunities together. Okay, so make sure you click on that link later once it's posted, and then you follow Trust Your Talent Academy's Eventbrite page so that you constantly get notified about what is coming up. So coming back here, why distressed properties? Well, why distressed properties? I mean, we've talked about that a lot, quite a bit now over the first couple of episodes. And I mean, we always like to kind of show a picture, and the picture is usually of property that is physically distressed. However, from part 2, you already learned that it doesn't necessarily have to be a physically distressed property. It could be distressed owners, distressed sellers, people that unfortunately have come across difficult life situations. However, again, difficult life situations happen to many, many of us. It has, and now at this point, it's now reflected through their financial capabilities to deal with these life scenarios. And again, it's not right or bad or wrong or good or bad in this case. It's just that unfortunately, as I keep sharing, the one biggest lessons that I've learned over time is that a lot of the times when we graduate from normal, traditional school, we don't get graded, we don't get evaluated, and we don't get report cards anymore. And so I learned a long time ago from a book called Rich Dad Poor Dad by Robert Kiyosaki, and he said that our financial statement really is our real life report card. And so in this particular case, when things like that happen, it is really because of the fact that they have not protected themselves well financially. And as a result, that's usually the first thing that they have to sacrifice and start letting go of. And so this is also why one of the lines that my best friend's mother once said, and it's really funny because these are all little lessons that I've accumulated over the years. However, they hit at different times and they mean something different at different times also. She said, if it's something that money can solve, you don't really have a problem. If it's something money can solve, you don't really have a problem. And so, and this is why, again, if and when you decide to build a strong financial foundation, financial securities, and some people call it financial blanket around you, your family, and your future, then you don't really have to worry about it so much so that you don't become a distressed or motivated seller. And that's also why in our industry, we always say we want to work with, and help distressed sellers solve their real estate problems. If you watch the other episodes, you'll remember me saying that over and over again, because once you are financially educated, you can develop the skills, the competence, and the confidence to take action, to act on solving other people's problems for them and create mutually beneficial and, in most cases, profitable, financially beneficial relationships for everybody. Okay. So, why distressed properties? To sum up, making money in the buy. And this is also one of the biggest differentiators between trained investors, educated investors versus just regular property collectors and property buyers. It's the fact that educated investors, we make money when we buy. Most people make money in real estate when they sell because they're always hoping for the big payout. And as I mentioned, this past weekend, I had the pleasure of sharing and speaking at the multifamily conference here in Toronto, Canada. And I've had somebody, actually multiple people, coming up to me sharing their challenges about how they've got anywhere between 5 to 10 condos pre-construction coming up due, and the valuations of those condos are not how much they agreed to pay for. And so as a result, they even have to come up with more cash to close now, or they risk losing their deposits, as well as perhaps a legal battle with the builder. Okay. And so that's not the situation that we want anybody to go into whatsoever. And that's why educated investors, we focus on making money when we buy. Buying is okay. Okay. I keep saying all investors are buyers, but not all buyers are investors. And this line also explains that. Okay. If you remember me saying all thumbs are fingers, but not all fingers are thumbs, the idea really is there's still a fundamental difference between buyers versus investors. Yes, we can like real estate. However, like means that there's some emotional attachment. I'm going to share a few episodes later on about why we like real estate as an asset class. And that's through a very logical thought process and different factors. Okay. And those are all very logical factors. And then if you still decide to love it, that's completely up to you. Okay. So next is getting forced appreciation. And that's exactly what the BRRRR process is about. It's the fact that we do not sit and wait, because sitting and waiting is like praying. Praying is not a strategy. If you want to make money, you need to have a plan and a strategy so that you can properly take action to execute your plans. And so praying and waiting is not a strategy. And this is why when we make money in the buy, we put it through the BRRRR process, as I've shown you already in the previous episodes, then we are able to create the forced appreciation. And now it depends on your actual true exit strategy. Does it fall under equity income or portfolio income, or does it fall under earn and active income? That is completely up to you. Remember, I've also shared this before. Your exit strategy determines how you make money and how much money you make. Okay. And so anybody with some sort of resources and money can buy anything. However, how you truly make money is based on how you exit the deal properly. So with that said, next is you have the ability to improve the cash flow however you want, whether or not you're going through the entire BRRRR process. I've had investors, they don't believe in the BRRRR process. Okay, they don't believe in it. They're okay with leaving a bigger chunk of cash in the deal, and they care less about the ROI, or the cash on cash, as I mentioned during this top 6 priorities. So I believe those are episode 14 and 15 if you want to go back to review them. However, what that also means is that once they bring the value up, when they're renting it out, they're still renting it out based on fair market rent. And as a result, because their debt servicing ability is much lower, so that the cash flow is a lot better. And simply because of the fact that they physically improve the conditions of the properties, a lot of the major capital expenditure items are done. A lot of the things that would really cost on a monthly basis as a result affecting your monthly operating expenses have been reduced, especially initially, so they can enjoy a healthier cash flow on a monthly basis. And next is easier to find deals, because now you're not lining up, camping outside of pre-construction sales centers, okay? And you can really create the deals that you want. And so this is also why we say find deals. Really, I mean, find deals should be quoted together, because as educated investors always say, good deals are found, great deals are created. And in this particular case, in case you haven't really noticed yet, we are at every turn, creating good deals for ourselves so that it feeds into all income buckets and based on how we like to feed into them. And so, how many people actually enjoy having full control over how you make money and how much money you make? And this is what the entire training curriculum is based on, is to teach you how you make money and how much money you get to make via an asset class that is real estate that we all enjoy so much. Okay. And again, multiple exit strategies are available when you start with distressed properties and taking the property first approach. Again, later on, when I'm sharing with you lease options, most of the times the way we demonstrate that the principles and how to execute that particular strategy is through what we call tenant first or tenant buyer first, as opposed to property first. And so in this particular case, when it's property first, you have way more multiple exit strategies that you can leverage. Okay, so we're gonna go into examining those in the next episode. However, by the next episode, I'm pretty much going to say that it's likely going to be an episode that's coming up, maybe episode 21, 22, because the next few days I'm going to be on the road and we're going to be putting on some TYT Connects. So what are TYT Connects? These are the networking events that Trust Your Talent Academy puts on from time to time across North America so far. We've had a couple of unofficial ones in Asia already too in the last 3 years. However, in North America is really where we have the largest footprint at the moment. And so in the Eventbrite link, you're going to find out how to attend all these events. And as mentioned before, I'm pretty sure we don't charge for an entry fees. Most of these events are happening at a restaurant, so that the idea is it's a very casual setting. I'm going to be wearing this tonight in Ottawa. So June 1st tonight is going to be in Ottawa. It's always at 6 p.m. local time. And on June 3rd, which is this Saturday, we're going to go to Waterloo, Ontario. And then next Wednesday on June 7th, it's going to happen in London, Ontario. And so I'm so excited to bring Trust Your Talent across the country, meet good people, build new relationships, and deepening the existing ones that we've already built as a community. However, these events are completely 100% open to the public. So who should be attending Trust Your Talent or TYT Connect? Well, if you are thinking about looking into real estate as an investing vehicle, or if you're looking to get some sort of coaching support and you're wondering who Trust Your Talent is, you want to make sure that we are real people, this is for you. Also, existing investors, business owners, come out and network, because again, you don't always have to be an active investor. A lot of passive real estate investors have actually joined TYT Connect over the last couple of years just to make new relationships so that they are able to diversify and get to know new communities and new educated investors to park their money in. And so with that said, we are just facilitating an environment for that to happen. So come out, love to meet you over a nice meal. So once again, check out the Eventbrite link, get yourself registered so that you can come out, because sometimes, actually almost every single time now this year so far, all the TYT Connect events have been sold out simply because of space capacity. at the restaurants. So make sure you get yourself registered. I know today is Ottawa, and maybe you had plans that just got canceled. This would be the perfect opportunity for you. So I hope to see you there. And with that said, enjoy, if you're in Ontario, the amazing weather that we're having here in Ontario this week. And if you're anywhere else, well, have a great rest of the day and live well. I'll be back tomorrow when I'm on the road. So the content's going to be a little different. Stay tuned though. It's going to be fun. Bye, everybody.